You may have heard that if you're at a community like the Admiral, a CCRC, that there is often a tax deduction, pretty sizable in some cases, available to the residents in that community. And so how does that work? Okay, well, let's first talk about how this deduction works in general for anyone. Okay, any of us today living at home, wherever, doesn't matter, you may qualify for a medical expense tax deduction. And some of you may already know how this works, but basically what you do is you add up all of your medical expenses for the year, including your premiums for health insurance, Medicare, and so forth. Add all that up, and if it exceeds 7.5% of your adjusted gross income, that difference can be deducted as a medical expense tax deduction. If you itemize on your taxes, if you take the standard deduction, which more people are now because it's higher than it used to be, you may not, then you wouldn't qualify. But if you itemize on your taxes, then you can take that deduction if you qualify. And if you have a year with really high medical expenses, it might make sense to itemize in that year. That's a conversation to have with your accountant. Okay, this is not tax advice, but I'm just explaining how that deduction works. So how is it different if you're in a CCRC? What changes? Well, you're still going to add up your expenses, just like I said a moment ago. But now you also can add to that additional expenses within the CCRC that you may have access. So residents generally, every year will get a letter from probably somebody, the finance director or whoever within the community, and it will say X amount, 30%, 40% of your monthly fee qualifies for this deduction. And you can take that to your accountant. So they kind of give you the formula. You go to your accountant, whatever, and see if you can actually use that or not. But some portion of that monthly fee that you pay may be deductible. And I've seen it 20, 30, 40% before. So again, residents generally get a letter with kind of the formula for what that is, and you can take it to your accountant. Also, in year one, when you move in, there is a deduction on that entry fee as well. Pretty sizable deduction on the entry fee in that first year. So, you take all that and still compare it to 7.5% of your adjusted gross income. So, it's just you've got more you put in the bucket, so that deduction potential is much higher when you live in a CCRC than it was previously. And that's what your deduction is.